Generally, trading involves the sale and buying of products or assets. These assets may include stocks, cryptocurrencies, bonds, and many others. Crypto trading involves the buying and selling of cryptocurrencies. It entails monitoring price movements to determine the best time to buy or sell in order to make profits. Understanding crypto trading will help you determine which digital currency to invest in and the best time to buy or sell. Before delving into the basics of trading, let's briefly look at the difference between trading and investing. Investment usually involves generating profit over a long period. It involves purchasing assets and holding them over time to generate wealth. Investments may take years or even decades. Trading focuses on making profits in the short term. Traders aim to sell their assets quickly to make a profit, focusing on the immediate future. So while trading and investing involve similar actions, they differ in duration, strategies, and operations. Traders operate on market volatility, taking advantage of rising and falling asset prices to make frequent but smaller profits. The crypto market, like most financial markets, is volatile. Traders depend on this to make short-term profits, while investors avoid short-term losses by holding on for the long term. Both trading and investing have their own benefits and risks. Understanding the differences will help you decide which approach is right for you.